Hey all, welcome to ShareTreck. This is Raj here. Friends, I'm making this special video to highlight why NVDA is a great buy on dips. And if we have dips in October, I'm going to be doubling down on it. So I value your time. I'll give you the bottom line of this video. The bottom line of this video is that NVIDIA has got great strengths in multiple areas. I list them in the details if you want to see the details. And the bottom line is it has got a wide moat around it. And at least for the next 2 to 3 years, NVIDIA is going to be the top dog with pricing power and margin power. And that's the reason why I think we need to look at NVIDIA. It has a target price of around $143 in the near term. So that's what I want to say in this video. So without further delay, let's look at the disclaimer and then get started. Welcome back, friends. I'm going to justify why NVIDIA is a quality stock with substantial growth potential. NVIDIA is not just a leading player in the semiconductor space, it's a company that has been at the forefront of major technological shifts, and the data shows that it's poised for even more growth. If you're an investor looking for a stock that combines strong financial with massive future growth potential, I think NVIDIA should be at the top of your list. It's at the top of mine. Of course, this is my personal opinion and not financial advice. So please do your own due diligence. And I will insist that here is why NVIDIA remains an outstanding buy, especially during major dips. The first point I would like to make is the explosive revenue growth from NVIDIA. If you look at NVIDIA's recent financial performance, it speaks volumes. In Q2 2024, the company's revenue surged by an astonishing 122% year over year to $30.04 billion, significantly outperforming expectations. NVIDIA's guidance for the next quarter remains strong, with a forecast of $32.5 billion in revenue. This shows that the company is still in the high growth phase despite its already massive size. This level of revenue growth, averaging 88.2% annually over the past 3 years, makes NVIDIA a standout in semiconductor industry. Even with the inherent cyclical nature of the sector, I think NVIDIA continues to demonstrate its resilience. Buying on dips during these cycles can allow investors to capitalize on long-term growth as NVIDIA's dominance expands in key areas like artificial intelligence, data centers, and autonomous vehicles, as well as robotics. The second point I would like to make is the dominance of NVIDIA in high growth markets. I would say that NVIDIA is not just about gaming chips anymore as it was once upon a time. The company has been evolving and has led to some of the most exciting and fast growing industries, including artificial intelligence, where NVIDIA's GPUs are at the heart of AI development, and their unique CUDA programming language, which locks in software developers to its platform, has provided NVIDIA with a significant competitive moat. If you look at data centers, as the demand for cloud computing continues to explode, NVIDIA's GPUs are powering the servers of the future. And in autonomous vehicles, NVIDIA's technology helps drive the future of automotive safety and self-driving cars, positioning it as a leader in this massive industry shift. If you look at the size of the automobile industry across the globe, and if you imagine even a fraction of that using autonomous features, then NVIDIA would be at the heart of it, and that can give you the potential of the explosive growth NVIDIA has in its store going ahead. Now let us turn our attention to the superior margins and pricing power. NVIDIA's ability to maintain industry-leading gross margin highlights its pricing power and operational excellence. The company achieved a 75.1% gross profit margin in Q2. Yes, you heard it right, 75.1% gross margin, up 5.1 percentage points year over year. This shows that even as production scales, NVIDIA is maintaining its pricing strength in the market. And this is a key indicator of its differentiated and high demand product lineup. With free cash flow margins averaging 48.6%, NVIDIA has both the profitability and the financial flexibility to continue investing in a future full of growth, while also returning value to shareholders. This means the company is not only growing fast, but doing so efficiently. And they have done that by share buybacks, and they've also done that by having a strong moat around them so that the competitors are at least a couple of years further away than they are, in my personal opinion. So that's one of the differentiator out here. The fourth point I would like to make is the exceptional free cash flow and capital position. Cash is king, and NVIDIA has been generating substantial free cash flow, clocking in $13.48 billion in Q2 2024 alone. This financial strength provides NVIDIA with the flexibility to invest in new technologies, fund acquisitions, or return capital to shareholders through buybacks, which they have already announced, and dividends. NVIDIA's balance sheet is another area where it shines, with $34.8 billion in cash and only $9.77 billion in debt. NVIDIA is in a net cash position, and this gives the company substantial financial room to maneuver, whether through future R&D mergers or navigating potential downturns. And in the long-term market positioning, I think NVIDIA's innovations with ARM architecture could further extend its market leadership, because this will allow NVIDIA to ramp down the power consumption and make it even more attractive for data centers. ARM chips are already known for their low power consumption, making them highly sought after in mobile and embedded system. And NVIDIA's strategic plan to combine ARM's technology with its own GPUs could create a compelling alternative to Intel's x86 architecture, particularly in data centers, which is a rapidly growing market where NVIDIA already excels. Now, let us look at the competitive moat, which is very important for the near term. A competitive moat in terms of NVIDIA's CUDA programming platform is a strategic advantage that has created a massive barrier to entry for rivals like AMD and Intel. And by ensuring that CUDA only runs on NVIDIA GPUs, the company has locked its dedicated ecosystem of developers, and this gives it a major advantage. This ecosystem continues to drive demand for NVIDIA's hardware, further strengthening its competitive position. But this is where I would draw a note of caution, because in the market, perception is everything, and everybody's like Chicken Little, the cloud is falling. So you have to pay close attention to what FTC is doing. FTC has even blocked the merger of a handbag manufacturing company. So as this current FTC is very, very sensitive. So we could even have challenges which says that NVIDIA should not make CUDA only work on NVIDIA's hardware. That kind of a claim can come up in the future, which is, in my opinion, meritless. But nevertheless, if any news of FTC looking at NVIDIA comes, there will be a drop in NVIDIA share price. I think that will be an opportunity to buy. Again, personal opinion, not financial advice. But the other area I would like you to caution is more plausible and possible. It is the use of AI itself to create a CUDA-like platform for the competition. That is not beyond the realm of possibility, so that can happen, but I think it would take at least a couple of years before we get into that kind of a situation with any of NVIDIA's competitors. Next, I'm looking at valuation and upside potential. I think that despite its stellar performance, NVIDIA's current price to earning ratio of 38.3x suggests that it's still trading at a reasonable valuation given its growth potential, and Wall Street analysts have set a consensus one-year price target of $143.10 compared to its current share price of less than $120. So I think right now it looks attractive, but I'm going to hold on a little more to see if October surprise comes in and I can buy it at much cheaper levels. And this implies to me a meaningful upside, especially for investors who are patient and buy on the dips. That's the case for this particular video. And I would like to conclude by saying a must buy on dips. NVIDIA's combination of robust revenue growth, unmatched innovation, high margins, and financial strength positions it as one of the top growth stocks of our time. And the company is well poised to continue dominating emerging tech sectors like AI, data centers, and autonomous vehicles, as well as robotics. With its superior pricing power, strong cash flows, and promising roadmap, NVIDIA is a quality stock that investors should consider buying on dips for long-term growth. By investing in NVIDIA, you are not just betting on one of the best semiconductor companies in the world, you are positioning yourself to benefit from the transformative technologies that will define the future. And now I'm talking to the genomics investors in our channel. Genomic investors, you have been so bold and brave, latching on to genomic companies despite their weak financial position, weak balance sheet, all on the promise of a future where a therapy will be approved by FDA and it will make big money. Look at NVIDIA. put at least a small portion of your money in your NVIDIA. That's my personal opinion, not financial advice, but this is a compelling case I think I have made for you guys, because in this channel, I'm a retail investor who is sharing my thoughts with you. I've already put a lot of money on NVIDIA and plan to put more into it. I'm not saying you just blindly follow me. All I'm asking you is to critically evaluate the thesis I have provided you and let me know in the comment section what is your feedback. Are you now going to plan to buy NVIDIA, or are you going to wait a little more? Or are you just locked onto genomics? I would like to hear from you. Thanks and have a great day. Bye for now.